Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 4-hour chart of gold USD in front of us right now, and the current market price is 1932.50. This is the current market price. As we all know, that gold chart has been giving us a crazy ride for the last couple of days. Gold was in strong uptrend when the war broke out between the Russia and Ukraine, and it made a high of 2070, and after that we have witnessed heavy selling on the chart of gold right now. So to be honest, we are not sure in which direction the gold chart will move. So it is better to trade from level to level only. And my dear friends, if you're new to the market, if you're a beginner, if you have limited capital, then do not trade without stop loss. Trading without stop loss, especially on the chart of gold, is like suicide. Do not make the mistake. Okay, so these are the levels here. These are the three levels that are important for the day. Okay, first of all, I would like to talk about the strongest level in the market, that is 1895. Okay, around 1895 we have a very strong support for the market. You can see when price came down, there was a sharp price rejection from below. So it gives us the confirmation that strong buyers are present around 1895 level. So in case market comes down to the level of 1895.96, okay, this level, okay, you can expect a good price reversal, and you can go for a buy. So 1895 is a very strong level for gold right now. So if market bounces, definitely we can go for a buy around this level. And on the other hand, the next important level for the chart of gold is 1950. 1950 is also another important level, because when gold, okay, listen to me carefully, when gold tried to recover, 1950 was the level that acted as the resistance. And if you have been watching my videos, then you know it very well, and I have already discussed that the round figures like 1900, 1950, 2000, these round figures are also psychological support and resistance of the market. Okay, so 1950 is a resistance for the market. So in case market goes up from here, okay, in case market goes up from here, we can expect selling pressure around 1950 again. So if we see price rejection from above, if we see shooting star kind of a pattern, if we see a bearish engulfing pattern around 1950 level, then definitely we can take a sell position. But if the buying power is high enough, if you see that market is forming big green candle at the 1950 level, then do not take sell position. Never forget that these levels are not permanent. Okay, so your observation will be very important. Observation is the main thing that changed the game. So observe the market first. If you see that yes, selling pressure is there, go for a sell. If you see that no, buyers are very strong around 1950, then wait for some time. If you see that market is crossing 1950 level with good amount of volume, size of the candle is good enough, you can also go for a buy. So observation observation is important. Okay, so 1950 at the top and 1895 at the bottom are the most important levels for the market. Okay, and we can see that I have also mentioned one more level here, 1922 to 1923. Okay, to understand the importance of this level, you can see that I have mentioned the reliability as medium. Yes, strongest level is 1895, then 1950 is also more or less good enough, but you can see the reliability is medium for 1922 level. And why reliability is medium? Let me show you. Because to understand this level, I need to take you to the 15 minutes time frame. See, this is the 15 minutes time frame of gold here. Okay. And in the 15 minutes time frame, you can see that this level is acting as a minor support for the market, and there is a possibility, okay, there is a possibility that market may try to bounce from here. And apart from this minor support, if we take help of the Fibonacci retracement, we can also see the same level is also the 50% Fibonacci retracement level. So considering these two factors, I think that there is a possibility that if market comes to the level of 1922, 1923, market may bounce. Okay, but still I am not considering this as a very high reliable level, and the reason is the time frame. Lower the time frame, low reliability; high time frame, high reliability. This whole setup is in the 15 minutes time frame, so as a result we are not considering this as a very high reliable level. So as a result, we have only three levels in the market right now: 1950, 1895, and 1922, 1923. This level right now you can see price is trying to take support around the 200 moving average, but I will not consider a buy here because the 200 moving average is in the 15 minutes time frame only. And I would like to also talk about DXY here. So if you have watched my yesterday's video, then hopefully you were ready for this thing, because we discussed yesterday that market may take support around this level. So you can see, as per our expectation, market took support. Okay, market took support, and I think there's a good possibility of market going up from here. So in case it fails also, then this level 97.75 will also be there to provide support to the market. Overall, the bullish structure, bullish setup of DXY is still present in the market. So yes, there is a possibility of market bouncing from here. So DXY. Okay, so be careful, and whatever you do, please follow proper risk management, use proper stop loss. This is my analysis, I can be wrong as well. So bye bye, take care, see ya tomorrow.